when you think that Latin America today produces a little bit less than 25% of all the food consumption worldwide, and in the next 20 years that should be at least doubled, that seems like a pretty huge market that needs disruption. And we believe that that type of disruption could come in two different flavors. There's obviously opportunities in sensors and data analytics. There are many things that could end up being for global companies, and we are starting to see that happening from Latin America. That's something that it didn't happen 10 years ago.
When we founded the company back in 2007, we weren't Agtech focused. We were focused on tech. And as we started making investments, we realized on the first fund, which ended up being 50% Agtech, that there was a clear reason why we should be in the Agtech space in Brazil. One of them is, if you're doing tech in Brazil, most of the research centers, the high-level research centers, University of São Paulo, State University of São Paulo and Campinas, the aeronautical engineering, they are Embrapas, they're all producing world-class research in Agtech in a much higher level than compared to other sectors. And second, something that Mariana mentioned before as well, when you produce technology for agriculture in a tropical environment, you have a natural barrier against temperate climates. Now, things happen very differently in a tropical agriculture, be it because of biodiversity, biolife, moisture, temperature, etc. Everything is much faster, and you have different crops, so you ended up having a different barrier to entry than foreign guys. Once we started doing the maths in terms of the market sizes, what Brazil is very competitive in, the top 6 or 7 crops were number 1 exporters, 3 or 4 additional ones were top 3. It makes a clear investment case, that we should be very competitive in producing local innovations. I mean, agriculture represents 23% of Brazilian GDP, and it's by far the most underfunded sector in Brazilian venture capital.